12th April 2023, Wednesday, MAO with Kel. Is the selling coming or the bigger bull rally is starting? This is the question that everybody's asking me right now, and I can tell you this, guys. Look at my video today and you will probably get the answer, because I am also torn apart between two sides. But if you really ask me, it's all right. I seriously think that the selling is about to begin. So let's go into details right now. Now, disclaimer apply as usual, and thank you, Ames, for the kind sponsorship. Now, first of all, guys, 19th of April, we're going to have our omakase lunch, and we're going to have it at this place at Golden Mile Tower, and I'm going to invite 4 guests. So as long as you guys put your comments of today's video into the comment box, all right, we will stand a chance to win the lucky draw that will be happening this coming Saturday, all right? But of course, you need to have a thumbs up and a love button from me so that you guys will be qualifying for that. All right, so if your comment is like not related to the video, then I will not be able to give you that chance. Hope you understand. All right, let's recap what happened last night. We have a very interesting day. Hold on a minute. I think that's a PowerPoint issue right now. Just give me a short moment on this. Okay, let me just put it in. Okay, so first of all, let's know that what happened last night. The Dow Jones up by 98 points and the Nasdaq down by 87 points. So this continued to show that the interest rate factor is going to hurt the technology companies. And I've been telling you guys to avoid buying Microsoft, Google, Apple, or Tesla. So all seemingly happening was Amazon, Microsoft down by 2% and Google down by 1%. Now, interestingly, Tesla recovered by 1% last night, but that's still at 186. That means that it went down to about 184, 183 recently. So the thing is this, we always see that Tesla about 177, 178, there will be some rebound over there. So that is the very strong hold. But if the market breaks below that, then we should see some selling. So what's the news on it right today? Now, today we have the consumer price index slotted for 8:30 p.m. Singapore time later. And polling shows that it's supposed to go up by 0.2%. That means that they're expecting the inflation number to be going down. But if anything goes higher than that itself, right, this will going to shake the market a bit, yeah? And of course, we have the minutes from the Federal Reserve meeting that we out due on Wednesday. That's after the market, around in the late night. And of course, we do expect that it should be some suggestion that they may actually look to continue rate hiking as long as inflation is still ongoing. And of course, we also know that we have a few first quarter earnings coming up. We have the JP Morgan, Wells Fargo, Citigroup, and of course, United Health. Now, we do expect United Health to be doing well. Well, we covered this recently, and we did say that if the price goes down, they'll be selling in the market. But recently, we see United Health back to above 500. So again, this is one reason why the Dow refused to go down, because this guy actually holds a very heavy component stock. It's about 11% of the entire Dow. So the thing is this right now, we can see that most of the Dow and S&P is doing okay. Only the Nasdaq is down right now. Now, one thing that everybody is now jumping in joy is Bitcoin. Bitcoin is just 1 year away from a major technical event. What is that? Yes, the halving. So history shows that it could be another bull market, because usually at halving time, where the supply get even lesser, seemingly based on historical pattern, that there will be some upside. But as we can see right now, Bitcoin is from 17,000, now has rose to 30,000. It's up by almost 80% from start of the year. Is it overdone or just starting to go? So all we can say is this: we all know that the next halving will be in April 2024. So if you look at it right now, if there's going to be any economic crisis, it would be best to happen right now before June, before August, September. Then after that, if all this risky asset pulls back down again, I think that will be a lovely time to buy some Bitcoin. Yeah. At the moment now, must understand this. Now it's at doing a 6.25 for each block successfully mined. So for the next halving, it will go down to 3.125. All right. So all this information can be found here. You can see that almost every time there's a halving, you can see the market has a bit of upside. Yeah. Let's take a look right here. There's a bit of halving, and the market after that went up. Another halving, the market went down first, but the last part you can see actually move up, and then after that the price goes higher. So we suspect that this could happen again. So guys, if you want to buy some Bitcoin, maybe if there's going to be any sell in the stock market or the equity market or the risk asset market itself, when the price goes down lower, maybe you can try to buy some Bitcoin. Yeah. All right. The thing is this, guys, remember this is what happened in the Ape Yacht Club. At one time itself, look at the amount of bid, no, my goodness, 19 million. Of course, not too sure whether it was done, but the thing is this: when the market go crazy, you don't want to jump in because you always get caught, right? So to me, so now to buy Bitcoin at 30,000, I felt it's a bit high. Let it come back down, and remember that there'll be one last chance for you to buy before next halving. Yeah. Now, the thing is this, Americans are feeling pretty stressed out right now, apparently, but then Janet Yellen says that no, the US economy is doing exceptionally well. Wow, okay. So the thing is this, look at the small business saying good time to expand. Look at it now. We are actually at the lowest level since June 1980. So I'm not too sure how Janet Yellen get her numbers, but people are not happy with that. As a matter of fact, there was a survey done that 70% of Americans are feeling financially stressed, right, say by the new CNBC survey. So all these things doesn't speak the same thing that what Janet Yellen is saying, right? Something is just so wrong. And of course, now the gap between the 3 months and the 10-year yield is the most inverted since 1980s, and usually it indicates recession. We have seen it many times before. But more important thing is right now, Americans are shifting their deposit away and into the money market funds. And as long as there's going to be like rate pause, right, even rate pause itself, that will send more money into this money market because you're paying me almost at 5%. Why not, right? I would rather do that. So that's the reason why right now, if lesser money in the system, right, and everybody going to the money market, you can think about it, what will happen next to the stock market. But of course, the former PIMCO chief economist, Paul, says that the rate hike will end by next month. Now, personally, I don't think so. I say that there'll be 3 rate hikes for this year, 25 plus 25 plus 25. Now the market is looking at 25 plus 25 right now, and they don't see anything beyond that. So this guy, Paul, he is actually the former PIMCO chief economist. He felt that, right, barring a surprise jump in inflation, right, he believed that the mounting economic pressure will stop the Fed from hiking any more rate. To him itself, it will be a pause and then a pivot later this year. So in his opinion, right now, but it's kind of different from the market, because the market actually looking at a hike continuously in this May. Then of course, my personal is the next one, that should be one more hike. All right. So again, everybody got their own opinion, but the thing is this: if everybody says the same thing, then sometimes things may just go opposite, right? Because now you can see the Wall Street expecting a rate cut. Okay, look at it. They are expecting a rate cut by September this year, and it will go down lower to 4.2%. So they're looking at the numbers right now that it should be going around somewhere around here, and you'll pause for a while and then they will pull back. Now, I don't think so. I think that this will continue to go higher and higher by probably June, July period. And that is whereby the market gets so stressed up, and then there will be some selling in the equity market. In fact, one of the Fed officials says that, William, if inflation falls, we will have to lower interest rate. Oh, really? Seriously? How do you think that the inflation will go down at the moment right now? Unless it's a global meltdown whereby the whole market now is not performing, then we have a global recession, yeah? So the thing is this right now, there's a lot of people betting on the S&P to fall. Oh, this is crazy. Now, the thing is this, look at SPX weekly right now. This is a S&P futures net speculative, and it's inverted. Okay, make it simple to understand this. Okay, so when these guys are heavily right, on the long side itself, right, you can see that the market actually stopped and then it started to crash down. So in this case, it's now, right, we are seeing the same thing happening right here, because we've seen this before, that the market near top, and then it sold off, right? So with what we're seeing right now, if this is going to be like bearing that the repeated pattern, then of course we do expect the market to fall. So at the moment now, this particular 200 MA shows that the S&P 500 is actually about 13750 kind of supported it right now. So it is very possible that the S&P 500 may really goes down to 3850 and then break the low to see 3750. Well, based on what we've seen now, it is actually very possible. Then of course, you can see that this is a CFTC leverage fund S&P 500 positioning versus S&P itself. You can see a very, very interesting phenomenon. Let's take a look here. Now you can see that, right, every time when these guys are actually on the kind of bullish side, right, okay, that is whereby the market actually comes off. Can you see that? And if let's say that they are very bearish, right, you can see that the market actually rallied back then. So with what I see right now, it's pretty clear that now we're seeing something like this. So if you're going to compare and contrast we should expect for the S&P to drop. But of course, if you look at it from another perspective, it may change it and then bring the S&P all the way to the sky. Now, which one do you think will happen? Let me know in the comment box. I'd love to hear from you. All right. But the thing is this, if you ask me, so it's pretty clear that the inversion will happen very, very soon. All right, so this is the hedge fund positioning versus S&P. You can see in more detail. Now you can see very, very interesting stuff here. Right now, we are actually at the same level as back all the way to the Lehman crisis. And that was, you can look at it right now, that was where the turning point was. But of course, do note, it went lower previously, but the market continued to go up. So it's not the most reliable indicator, yeah? But still, nonetheless, right, if that you're telling me now so many hedge fund are positioned to short, right? And if the Federal Reserve want to kill off this guy, he will pump the S&P all the way up and kill off all these short sellers. And of course, they will have to buy back the orders from the real market, from the actual market, and that will prop the price even higher. But on the flip, in the flip note itself, right, we can see that back there when the thing was turning up, that was where the peak of the housing bubble, and after that, slowly but steadily, the market robbed off everybody's wealth. So all I can say is, guys, if things are going to be repeating and repeating, that we need to be very, very careful. We don't want to be like too complacent and then forget that things is actually just around the corner. All right, so with that, that will end today's MAO video. Pretty short here, but the meeting is this, guys. If you look at the numbers, it does shows that a big movement is coming up. This is Cal signing off. Remember to put in the comment box, like and subscribe. Bye-bye.